Welcome back, guys, to another roundtable. My name is Adam. Victor.
Hi, everyone.
Hello. Kenny,
Hello.
You're the fifth person joining us for this roundtable. And today we're going to discuss one of the biggest IPOs this year, which is DiDi. All right. So DiDi is basically the Uber of China, and they're headed for a $67 billion IPO on the New York Stock Exchange. All right. So I think we all know how big China can be.
Yes.
This is the Uber of China. So tell us a bit more about, before we go into the IPO and the valuation and stuff like that, just how big DiDi is and how big the business is in China.
Okay, so if you look at the number of annual active users, it's about 493 million. Their daily average transaction is about 41 million, and they own about 90% market share in China.
Wow.
In terms of ride-hailing. So that is their main business. They are basically like a pure play ride-hailing as compared to Uber, because Uber have the other segments like delivery, freights and all this. So they are just pure play ride-hailing.
Mm-hmm.
In China, yeah. So and they have about, I think, 15 million drivers with them.
Wow.
Which is huge, bigger than the whole of Singapore, 2 times. Right? So yeah, if you look at just for a size comparison between Uber and Grab. Okay, so if you look at the number of monthly active users that they have on their platform, DiDi is about 154 million in MAU. Uber has about 93 million, and then Grab has around 25 million.
So DiDi is basically the biggest, in terms of the number of users, is the biggest ride-hailing platform in the world.
Yeah, so that's right. Yeah,
basically in just China.
And the international market. They also have exposure in Latin America, like Brazil and Mexico. But those are just a small part of the business. Okay, so in terms of the sales, platform sales, I think China contributed about 93.6% of the revenue. Then I think the rest actually comes from the international market. Okay, so yeah.
So from what I hear so far, DiDi is basically like Uber, but they don't have like the food services like Uber food.
They recently introduced mainly into the international market, but just only the recent years only. Still very small segment.
So since it's so small, we're just going to focus on its China business, because that's essentially what it is, right? And in China, they just have ride-hailing, and at 154 million users and 15 million drivers, is basically the biggest ride-hailing platform out there in the world.
Yes.
So there's quite a lot of potential, right? So I mean, it's already very big in China, but is there still a growth runway in China for them to grow some more in just the one country alone?
Yeah. So if you look at the penetration rate in China for the mobility market, currently I think as of 2020, the penetration rate is only like 4%. Okay, and that's equivalent to around 233 billions in terms of market size. Right, but it's expected to grow in 2025 at about 862 billion. Okay, so that will gives us about 8% penetration rate. Yeah, so that will give us a CAGR of around 29.9%. Okay, so this is according to the source that they have, the CICC, based on the prospectus that they have issued out. Yeah.
So even in China alone, there's still some
runway.
Yeah, it's actually a long runway. There's more and more cities sprouts around the area, and because it becomes more and more densely populated, as we've seen with Uber, usually the distance, people usually take Uber when it's a short distance, like 10, 20 kilometers. But beyond that, if you travel on a regular basis, it's best for you to own your own vehicle and drive it around.
Yeah, so I think if you look at the potential for, I think DiDi, I think is a lot of time, or rather a lot of people were probably banging on their autonomous driving. Right. If they can, this technology can be fully commercialized in China and outside of China, this market will expand even more. Right. And in fact, they expect the penetration rate to go up to as high as 30%.
35.9%.
Yeah.
Actually, the
by
autonomous,
2040.
the autonomous driving will help them to reduce the cost. But I think they are moving in phases. Right.
Yeah.
So right now, how they reduce costs is they reduce by having a bargaining power, where they talk to those people who are leasing the car, say, okay, you give me rent my car to my driver at a cheaper rate. So those drivers that go through DiDi to rent will get cheaper by 20%. So that's one way they help to reduce costs. The next phase is they go to electric car, because electric car is much cheaper to maintain and the cost is lower.
Yeah.
And the final stage, of course, the autonomous, and that will be the time where they become very, very profitable, right? Because you totally don't need any driver anymore.
Also, not forgetting, they also provide maintenance, refueling services, and to make it really cost-effective for these drivers to maintain their vehicles.
Yeah. So just in comparison, why you should use mobility kind of transport. shared mobility, right? I think in terms of pricing, the cost per kilometer in China, tier one, I mean, let's say you own a car, it will cost you about 6 renminbi per kilometer, cost per kilometer, right? But if you do use ride hailing, it only costs you about $3.50.
Okay.
That's on tier one. Okay, so that is almost close to 40% saving. Tier two, you have 30% saving, and then tier three, you have about 20% saving in terms of cost to own a car in China. So
okay.
that's why shared mobility is, I think, is getting a lot of popularity, not just in China but the rest of the world, right? Even in Singapore.
Yeah. You were saying 6 renminbi per kilometer, is it?
Yes.
And then it goes down to 350 renminbi because
Yeah.
you said dollars, so I wasn't sure.
Renminbi,
Renminbi,
yeah.
right?
Renminbi, yeah.
Okay, so it gets cheaper. So there's a lot of I mean, I hear it's 4% penetration rate in
Yes,
China,
yeah.
and it's already the biggest,
Yep.
but only 4%
Correct.
Yeah.
penetration rate. So the runway for China alone is huge. Like you were saying, maybe 35%. That's the projection by 2040.
Yeah, according to their perspectives.
Yeah, of course, if like autonomous technology comes in and everything, I think I would be happy to just be sitting in a automatic car. No more like rides
Yeah.
like that. So some drivers are like,
I'll let you try first.
Yeah. I
it's
think
a smooth ride all
that's
the way.
their final. I would say their final form
And-
because majority of their expenses still come from the driver commission, right?
Yes.
Yeah, because their profit margin will increase by a lot because now because the drivers want to get paid more,
Yeah.
riders want to
Yeah.
pay less, so they get squeezed really hard.
Yeah.
But they did say that, I mean, they're not going to eliminate all the drivers subsequently, right? Because the demand will expand even more as compared to the number of drivers
Yeah.
that they have. Once the
Okay.
autonomous technology kicks off.
I mean, it'll take some time.
Yeah.
Not every car will become autonomous
Yes,
straight away,
yes,
right?
yes.
But eventually, that will be the end game because
Yeah.
I think that's what Uber and Grab would want to have. Basically, you eliminate the driver, you
Correct.
really
Yeah.
save a lot of money.
Yeah, so now they have about 100 autonomous vehicles, I think, in China doing all this testing.
Oh,
100
okay.
only, 100,
Yeah,
right?
okay.
So,
Some way to come, but I think when the future comes, I would be really excited to have
yeah,
that. Yeah.
I'll let you try first.
But that's but that's still a long way,
I actually
man.
tried it in the US. I rented a Tesla, so
Yeah.
they have it's not level 5 autonomous driving yet. I think it was level 3 or 4. I don't know. So I asked the guy, hey, can I use that autonomous driving because it's already in the Tesla, and he said it kind of works on the highway because the lane markings are clear. It can go at a constant speed and all that. But once it's in the city, he said
doesn't work.
it's useless. It's not going to work over there. So you need to drive it. I was like, okay, but I didn't use it because if I'm renting a car, I want to drive the thing, right? So I didn't test it out. But yeah, so that future is going to come someday, and when that happens, I think DiDi and along the ride-hailing services are just going to explode. But let's go into that because since we're talking about driver, commissions and all that, there's a big chunk of expenses. So what are the financials of DiDi like? Are they healthy or are they like burning cash, just like Uber and the rest?
Yeah, they're still making losses in their operation.
Okay.
Right. But if you look at the cost, I would say if I compare the cost to the revenue, right, DiDi is about 1.1 time.
Okay.
Because they are burning, that's why it's a bit higher, right? But if you look at Uber, it's about 1.38. So actually, if you talk about savings and cost, more effective, right? DiDi is much more effective as compared to Uber.
Okay.
Right?
yeah. In the first 3 months of this year, 2021, they reported actually a profit. Okay, but that is because there's a investment income that is one-off due to the deconsolidation of one of the subsidiary that they have, right, in the community group buying. So they record a paper gain on that. So I think you should exclude that out. But at the end of the day, I think they're still loss making. So this type of company usually they are all the ride hailing, I think, businesses, even Grab, Uber, they're all still making losses, although the mobility part, they say they are EBITDA positive.
Yep.
Yeah, so numbers wise, I mean, as an investor, when you look at them, you won't feel excited lah. But more on like the growth that they have, the long runway. Okay, so you are investing in the future, not so much.
I think you're
For now,
investing in
yeah.
their autonomous driving.
Yeah.
Yeah.
I think that would be the ultimate.
Ultimate. Because
Yeah.
when that happens, the margin going to explode.
Yeah, so near term wise, I think it will come from the electric vehicles because that will save a
Yep.
lot in terms of for the driver. So the driver can actually earn more using the same car.
So
yeah.
in terms of electric vehicles, now they are already about 38% of the total electric vehicle mileage account for China already. So they're already quite big already for that. Right.
Okay.
Yeah.
So I mean, I think people may want to know since it's bigger in terms of numbers, but in terms of like revenue or EBITDA, like you're saying, do they make more than Uber, or does Uber, make more still at this point?
I think for the reported revenue for the 2020 is about 141 renminbi, right?
So
if you
about
transfer-
21.6 billion US dollars.
So it looks like it's a lot bigger as compared to Uber, which has reported a revenue of around 11 billion only in 2020, right? But you need to take into account that the numbers that they give it to you is actually taking into account of the driver's earnings. Okay, so the numbers that Uber that reported in their revenue is excluded the driver's earning, which about of it, right? So for DiDi, I think we have to look at this company not from the total revenue, because some people may just like to do valuation on price to sale and then just simply take the sales and then do the valuation. But it doesn't work on DiDi because they lump the driver earnings into this. Okay, so you need to remove that out. So I think the closest number or the best number to look at is their platform sales. All right, so if you look at the platform sales, I think it is around 34.7 billion. So that will gives you about US dollar 5.3 billion in 2020. Okay?
So roughly half of what Uber is making.
It's making, yes.
Alright.
Yeah.
Okay.
Which explained, I think their market valuation is lower as compared to Uber. Uber market cap, I think as we speak, I think it's about 90 over billions.
Yeah.
Yep.
And this company is going for IPO at a market valuation around 60 over billions.
All right.
Yeah.
So in terms of numbers, it's a bigger operation, but they make less money, about half of Uber's
Yeah,
revenue.
maybe it's cheaper to
Right,
I
Drive
mean, it's
by
cheaper.
China.
I think it's cheaper in China to do things.
Yeah.
It's
Yeah.
right now at this point. So that is basically because if you do it in a USD comparison, then
Yeah.
obviously
Yeah.
the China business would be a little bit less. So let's come into the valuation right now. Since like you talked a bit about you pointed out that when you look at the financial statements, you just can't take numbers off based on the face value. You need to understand where the numbers come from, how they're derived.
Yes.
And if you didn't do that, you would think that DiDi is twice as big as Uber.
Uber.
Yeah, but that's because they included the driver's commission
Mm.
into that, and Uber doesn't. So this is why it's so important to understand the statements and what the company is about.
Yeah.
So using that, what is the valuation? I know we know it's going to be about a 60-70 billion IPO.
Yep.
Right. And they want to raise about $4 billion for the IPO. But how would you value DiDi, and how would you compare that to Uber? And what's fair?
Okay, so if you were to use the traditional one, which Rusmin said, don't give you a good picture. I just give a rough figure only. So Uber is about 8.6 times sales, DiDi is about 2.9 times. So that's just based on sales, but
So
Okay,
it looks very attractive to
Yeah.
subscribe to DiDi IPOs.
But I think partially because DiDi is not as profitable. DiDi is about 11% gross profit margin as opposed to Uber of 37%. Yeah.
Yeah.
and on top of that, Uber have multi-industry. DiDi is only pure ride-hailing.
Yeah. Okay. So I think if you strip out their revenue, let's say look at the clean platform sales of what DiDi has reported on apple-to-apple comparison with what Uber is actually reporting on the numbers. Although Uber has the food delivery business, if you just look at the clean sales on their platform, I think in terms of multiples, DiDi will gives you a 12.2 times kind of valuation.
So that's a very big difference from the 2.9 times.
Big jump. Okay, because of the drivers earnings.
If you
are
don't
inside.
see carefully, right?
Yeah. So, but I'm just taking into account their platform sales coming from China. Okay, so this does not include the one that is in the international market. Okay, anyway, international market is still a low single digit, 6%. They're about mid.
So you're saying
level.
12.2?
12.2. Uber is about less 10 times.
9 times.
yeah,
9 times. Yeah.
Alright, so quite comparable.
Quite comparable. Actually, they are more equivalent to their closest peers, which is Meituan Tianping. They are the largest food delivery business in China. I think I think they are one of the biggest players. Okay, apart from Ele.me. So they are trading at about teens level, so I think low teens, 12 times, 13 times price to sales. Yeah, and of course, we just did a Grab IPO just a couple of months ago, right?
Yeah.
Grab was on the apple-to-apple comparisons, their valuation was a lot higher actually. I mean, the transaction is not completed yet, at about 25 times.
Yeah.
So Grab was a lot more
So if you look at
expensive.
all these players, you probably won't want to look at Grab.
Yeah, but to be fair to Grab, they are growing a lot faster.
Yeah.
They're expected to grow at 40 over percent versus I think DiDi is 20+% or 30% there.
Yeah, but Grab have to deal with a lot of governments. right? DiDi only have to deal with one China government.
Yeah, I think that's the attraction of DiDi because it's in one big country,
Yeah.
Yeah.
biggest in the world. So if they can just like dominate, and they really dominate the space, right? 90%
correct.
market share. This is really attractive. Well,
Yeah.
for Grab, they have to deal with different languages, different currencies, different
Yeah.
cultures,
And different country got different competitors
and
It's
all
a lot
that.
regulation
harder.
and competitors,
Yeah.
you know.
Yeah.
So I mean, you do check out our roundtable on the Grab spec IPO. We did that I think a couple months back.
yeah.
So we concluded that Grab was just a little bit expensive. So
Yeah.
in this case, would you think that DiDi's valuation is actually quite reasonable based on what's
Reasonable.
happening in the market so far?
Yeah, I think maybe you don't have to take my opinion, but you can take that Temasek, Morgan Stanley, indicated interest in subscribing for the stock in DiDi IPO. I think they did their sums. Probably it makes sense also for them to subscribe.
Okay.
Yeah, so personally, I would not subscribe because I mean I don't really invest in the loss-making business. I don't take into those new bets. Right. I mean, but if you have the appetite for that, you can always consider allocating.
I mean, if
some
you
for
believe
that.
in the future, right?
Yeah, especially the autonomous driving. I think that would be the kicker for all the ride-hailing companies.
But of course,
around
I
the world.
think it's never too late to even wait for the autonomous driving to really happen, and you look
But
into
would it
them
be too
again.
late by then? And by then, it's kind of like the price has gone up. That would be
Yeah.
the
No.
question a lot of investors were
Yeah,
asking.
but I mean, you can keep tracking the news, right?
Okay.
Until it got some because now they are still in the phase where you're not so sure whether the autonomous is going to work or not work. So you can
Yeah.
always keep tracking, reading their annual report. You get the hang of it.
And of course, having said that, we still have to bear in mind the risk, right?
Yep.
Yeah, it may not happen, it may not happen. The
Yeah.
autonomous driving may be, still very far away, beyond our expectation. Although a lot of people think that it will happen very soon. And then there's also risk that the at this stage they don't really classify their drivers as the full-time employees, right? But in certain countries like in the British, Britain, I think they did successfully. The driver successfully, to classify themselves as the staff of Uber. And once you're full time, you're entitled to all the benefits,
Yeah.
right? And the cost will go up.
Yeah, that's why they can't wait for autonomous driving because then it's a lot cleaner, right?
Cleaner.
Yeah, I mean it's just I mean it's terrible to say because these companies are they're more than happy to just get rid of drivers if they can, even though they provided a lot of employment at this point.
Yeah.
But it's just the nature of it. But I mean back to the business, it seems there's a reasonable valuation, a lot cheaper than Grab, but if you're investing in a company like that, it's very different from investing in kind of like a profitable, successful company like
Compounder.
a compounder like Visa or
Amazon.
Google, Amazon.
Yeah.
It's a very different kind of investment. So you got to treat it that way as
like
well.
a venture cap
Yeah,
investing.
it's something like a long-term
Yeah.
play this is going to work out in the future.
And it's only a very small
Yeah.
percent of your portfolio.
Yeah.
yeah.
Small, multiple bets, but very small, like 1%,
Yeah.
2%.
So you got to consider whether this fits your risk profile as
Yeah,
well, right?
that's
This is something that you want to have in
Even
your
I
portfolio.
did mention that Temasek is going to subscribe, right? But that is just a small part of their portfolio.
Yeah.
Yeah,
Right.
This is the thing again because just don't buy just because Temasek is
Yeah,
buying.
yeah.
This is totally different. For Temasek, it could be like a small,
Yeah.
really small
Yeah,
part
even
of
though
the
you
portfolio.
see it's like 500, 600 million, but that's just a small percentage to Temasek.
Yeah, Temasek manages like billions, big billions. So
Yeah.
you can't just like jump in just
Yeah.
because Temasek is. I think I wrote an article a long time ago about that. If you can find it, maybe we'll pull it out in this video, and then you can have a look at that. But yeah, so any other risks that you should consider for DiDi if you're looking at its IPO? What else could you?
Yeah, I mean, like they are 90% market share, so they probably the Chinese government is clamping down on all
Yeah.
this
But-
monopolistic practice already, right?
Yeah. So the regulation is one thing. Another would be that the thing about China is that it can be the monopoly. The next moment there's one new player come in,
Yeah.
enter the market. Look at what happened with Alibaba, and suddenly you have JD duopoly, right? Then suddenly you have Pinduoduo come in with the community group buying, and the same thing for I think DiDi. Even though they are a monopoly today, tomorrow it could be different. Because Meituan Tianping is also a very disruptive company in China, so they could possibly enter into ride-hailing and invest a lot of money, and then started to fight with DiDi on this.
Okay.
Yeah, anything could happen in China. It's
So you
very
think like maybe like
competitive.
WeChat could do something like that?
I mean, they do have apps on the mini program, like the DiDi apps and all that. And anyway, Tencent and Alibaba is their shareholders, so they all fight with each other, right? They compete. Even though they are friends, but sometimes they also fight in certain markets.
I mean, they're rivals, right?
Yeah.
They're rivals. Yeah.
Okay, so I mean, those are the risks that you need to look out for. There's no guarantee that it would always be.
Yeah, and it will be tough on that because they invest a lot in electric vehicles. They
Yeah.
created their own one, which is D1.
Yeah.
Okay.
So I think they'll be successful successful in the area in that sense that they will invest in this infrastructure and this electric vehicle. So once they are able to bring the cost down, that will give them a whole lot more advantage as compared to someone using their own vehicle. Yeah.
All right. So I think that's a pretty good, overview of DiDi's, IPO. I think it's one of the biggest IPOs in this year. I mean, anything that's China is usually huge news, right? Because it's a big country, a lot of potential. And in this case, this is going to be the Uber. This is the Uber of China. 90% market share is nothing to sniff at. Yeah, even though there's competition, like you mentioned, it could happen.
Yeah, and of course, if there's another COVID-19, let's hope that it doesn't happen. Then ride-hailing will be affected badly.
Yeah, if you all just stay at home, it's not going to be great. But anyway, yeah. So I mean, I think that's a pretty good wrap up of the IPO. If you're interested, have a look at it yourself. It's going to be listed on, I think, through an ADR, right? American Depository Receipt. $13 or $14. I think that's the mooted price. But yeah, I mean, if you're interested in it, have a look at it. We did point out a few things. We think, I think the valuation is kind of comparable to what the market is out there. But once again, always do your due diligence before you jump in. And once again, always make sure that you do your research and all that. All right. So once again, my name is Adam. This is Victor.
Thank you.
This is Rusmin and Kenny. You're the fifth person joining us. Thank you so much. If you like this video and you like our content and discussion, please hit the like button to tell us that we're doing a good job. All right. And of course, any comments or questions, put them in the comment section. We'd love to have a chat with you. And of course, subscribe to our channel because we have many more roundtables coming up as well. You want to get the videos as fresh as they come to you. So once again, thank you for watching and we'll see you around again.